You know what? Oh, we've been here for 20 minutes and I have not been recording. Oops. Oops. All of y'all that are just now seeing this, hey. Oh well, I'm just gonna say I'm still just running on adrenaline, so oh well. You know, life happens. So let's go do a new page. And let me go write this. I can't believe I did that. Okay, so here, now we're going to do a general journal. And remember, a general journal always has the date, oh, that's pretty. I'm just going to abbreviate. And then we have debit, and we have credit. And there's usually 3 lines. So let's make our little lines here. Woo! I am not an artist. Okay, so remember that everything is done by date. So you may have more than one transaction per date. That's okay. Each date is going to be specific. So you're not just going to go transaction 1, 2, 3, 4, 5. You're going to keep putting that date in there. Hi, Tanisha. Oh, I already had you in here. Oh, you must have, oh, you left and joined back in. Okay, perfect. So, on September 1st, we issued a check, 1169, for $1,900 to pay the September rent. So we're going to do 9/1, and then of course we're going to do rent, expense. Okay. Guys, you always list your debits first. When it comes to a general journal, you always list debits first, then credits, and theoretically for proper form, you will list them in ascending order. So you will always list the largest dollar amount if you have multiple transactions for one account. So let's say that you have, supplies. And you bought supplies, but you paid cash for part of it, and you paid the other part on credit. So they're different. Supplies are $2,000, and you paid $1,000 in cash, and then $1,000 in accounts for accounts payable. You're going to list obviously the expense for $2,000, and then you're going to list $1,000 for each one. Let's say you did, I'm having to think here, $200 in cash and $1,800 on accounts payable. Well, the $1,800 for the credit for that transaction would be listed before the $200 transaction. You wouldn't get counted off for it, but it's just proper form. So we have the rent expense, and so we know that we're going to debit or increase our expense account, our rent expense account for $1,900. We're going to offset this. You're going to come in just a little bit. And now we're going to credit our cash account, $1,900. Or decrease it. And then, so this is pretty easy. It's like, okay, I can figure out what's going on. There's times that you're going to add a description, and then you're going to come in just a little bit more, and you're going to literally write paid September rent. And you're doing that because you want to, when in doubt, include a transaction. You want anybody to walk into your door, open up your books, and know where your money went, what kind of money is coming in, and how that occurred. How did I get $1,400 in revenue? So if you receive $1,400, where did it come from? Did the owner invest $1,400? Did I have services of $1,400? Did someone pay me on accounts receivable for $1,400? Where did that money come from? Same thing on money going out. Okay, you just wrote a $1,900 check. Where'd it go? What did you do with it? Did you pay rent with it? Did you go and buy a fur coat with it? Did you take everybody out to lunch? What's the $1,900 for? And that's what your books are. Where did the money go? How did the money come in? What's going on here? Okay, does that make sense? Okay, looks like a lot of people have been getting kicked out. Okay. I cannot believe I've been here for 20 minutes before I hit record. Oh, my Lanta. That is the first time I've ever done that, and hopefully it is going to be the last. Okay. So that's what we're looking at on that. And you would just keep continuing going all the way down. So question 2. Ooh. And let's clear this. So, okay, so it's indicating which of the following accounts normally has a debit balance or a credit balance. So, Ned Cruz Capital. Well, the normal capital balance would be yes, it's going to be a credit. Perfect. And by now we all know that the normal balance for cash is perfect. So anything that is an asset, the normal balance is going to be a debit. Anything that is a liability, the normal balance is going to be a credit. So, and the same thing with, oh my goodness, it's itchy. Sorry. So fees income, the normal balance would be a credit. And an expense account, the normal balance is going to be a debit. Yeah. Okay. I started thinking about what I was telling you earlier, that it would be very rare to credit an expense account, but at the same time be very rare that you would debit a revenue account. In both instances, it might be something like a return of goods. Okay, had to think about it in my own head. That's scary, isn't it? Okay. So let's see what assignment 2.3 has, and then we'll go over some of the stuff coming up. There's someone else in this office, and I can't figure out who it is. 2.3, Q report. Okay. Again, really good grades. It looks like there were some people that turned in 2.3 late. Was there a connect issue with 2.3 on Saturday afternoon or evening? Oh, it's you, Heather. Bye. Okay, no one's responding, so I'm just going to assume that everybody was just late getting the assignments in. That's, that's understandable. It's better late than not at all. Again, overall, the grades are phenomenal. Remember, you have 2 chances to take any assignment or any quiz. Okay, Stephanie, yours locked up. Okay. No, yours was not late. Okay. Okay, so even if it's late and you want to take that second chance, you can. It's always going to award you the higher of any 2 grades. Everything looks excellent though. So let's go over 2.3 real quick. We only had one person not attempt that one. So we're posting to the general ledger. So on posting to the general ledger, let me see if it will save as. Let me see here. Let me see if it's going to let me do this. I'm going to try something. Nope, it's not going to let me. Okay. I wish it would. Ooh, I might have figured something out, guys. I think. I don't know. Come on, let me get. Awesome! Maybe? Yay! Looky! Looky, I did something! Okay. It doesn't take much to make me excited, does it? It sent you a file. Hopefully it shows exactly what, oh wow, I didn't try to send a file. Hopefully it only shows you what's on the screen. So, September 1st, Jewel Tucker invested $60,000 in cash to start the firm. So, once again, we're working with the cash account right now. We have September 1st, there is a debit or an increase to cash of $60,000. We did not affect anything here because we're doing the general ledger, and so the balance is $60,000. Then on September 16th, September 4th, purchased office equipment for $6,500 on credit from Den Incorporated. Received invoice 9823, payable in 30 days. So, where would we post that? 6,500. Well, 6,500 we would post. Let me see if it's going to let me do it. Stop that. I'm going to see if it's going to let me do both. So, because we purchased office equipment of $6,500 on credit, payable in 30 days, we know that we have an accounts payable that would need to be posted. So when we post accounts payable is a liability. So, oh, there's tons of accounts down here. So we would post it under accounts payable for $6,500 for a credit, which means that our balance is $6,500. So let me see if I can find that. Come on, be nice to me. Finally. No? Come on. It's not going to let me do it. There we go. This was really, really picky. Okay, so $6,500 for credit, and we now have a $6,500 balance under accounts payable. Then let's go to another one that's already posted here so that we don't have to go through that again. So on September 16th, we purchased an automobile that will be used to visit clients. Issued check 1001 for $14,500 in full payment. Okay, so remember when I told you that it's going to give you more information than you need? Do we really care that it's check 1001? Exactly. Do we care that it's in full payment? Yes, because that tells us that we've paid cash of $14,500, and we are not going to be affecting any other account. There's no notes payable or accounts payable, so that part we do care about. So as you can see, on September 16th, we credited cash for $14,500 to show that we took money out, and we now have a new balance for the cash account of $45,500. So now let's go down to September 30th. Wow, we had a lot happen on September 30th. Well, obviously, you're usually going to have more transactions around the middle of the month and the end of the month because that's when you're paying all your bills. So on September 30th, once again, we issued check 1003 for $4,200 to Den Incorporated as payment on account for invoice 9823. Okay, I don't care that it was to Den Incorporated. That's what a check registry is for. I do not care that it's for invoice 9823. That's what a check registry is for. And if your accounting department is doing everything correctly, when they issue that check, on the bill itself, they're going to write check number 1003, paid September 30th. And they're going to file that under Den Incorporated's vendor file. So there's no reason to keep putting that same information on every single thing. So the only thing that matters is that we paid $4,200 on the 30th for an accounts payable. So September 30th, $4,200 under accounts payable. We debit accounts payable because we want that balance to decrease to show, hey, I don't owe them very much money anymore. I only owe $2,300. But we also want to credit cash because we use cash to pay it. Sometimes I have students that will get confused because they're like, but I didn't use cash, I used a check. Cash and check, it's the same money. So it really doesn't matter whether you paid cash or whether you paid check or whether you used a debit card. It's coming out of the same account. If you used a credit card, it's a different account. Okay, does that help how you kind of follow everything around? Okay. My husband constantly says, I use the credit card. I'm like, did you use the credit card or the debit card? They're the same. No, honey, they're not the same. And just because the card goes doesn't mean you have money. So I'm constantly having to go, please don't do that. Okay, so I'm going to go out of here. I am going to go back into assignment 2.1, I think. Tomorrow morning I will go reopen assignment 2.1 and quiz 2.1. Now I'm going to go through and give zeros for the ones that have not submitted it. And the reason being is once those have been, you've completed those, if you will email me, then I will go in and manually update your grade so that I know we're not missing anybody. Okay, so I'm going to go in and give you zeros if you have not done those two. But then email me when they're completed and I will go in and manually change those grades. Okay, there is, and I'll just hold you to just one 10% reduction. That's it. I'm not going to hold you to the 10% every day. I just want assignments done. I want you to understand the assignments. Okay, so let me get out of Connect because we're pretty much done with Connect for now. I'm actually even going to get out of my email. Ooh, what a concept. And get out of that. Ooh. I didn't realize I had that open. And now we're going to go to, I'm going to clear page. I want to share, cancel. Okay, and I'm going to go load my content again. So the only thing I hate is if I load content and then I decide I want to do something else and I have to reload all the content. So bear with me. There's yes, there's the quiz 2.1. So when you first go in to week 2 under My Course Connection, you're going to see 2.1. Just click on that. That's the quiz. And then when you go into Connect, you'll see that there was another 2.1. And if you have not done that one, go ahead and do it. And you'll know tomorrow because I'm going to put in zeros. I'll actually probably go home tonight and put in zeros. So everybody will know what they missed. Okay, so T accounts. T accounts is what every basis of the general ledger is set up on, and that's what we've pretty much been doing all along. And of course they're called T accounts because they're lovely little T, and you have debits on one side and you have credits on the other side. And of course all T accounts are assets equals liabilities plus owner's equity. You will have multiple T accounts. You'll have one for cash, you'll have one for accounts payable, you'll have one for expenses, wage expenses, revenue, accounts payable, accounts receivable. We're simplifying everything right here. And of course, the rules of that account holds true regardless of the form of the account it's in. So if it's a T account and it's an asset, we already know that a debit is the normal balance that holds you at a positive. So it records increases, and a credit records decreases. So, of course, all the way through here, the way that you're going to analyze your business transactions is you're going to identify the account affected, you're going to classify the account, and determine the amount of increase or decrease for each account. Now, as Mr. Cook went over in all of his videos, and he does an amazing job, you may have multiple transactions on either side for one. You may have multiple entries on either side for different accounts for one transaction. So where I talked about you may buy supplies for $2,000, you paid $200 in cash, and you put $1,800 on accounts payable. Well, that's actually 3 transactions. But those 3, the cash and the accounts payable, together total $2,000, and your initial purchase of supplies are an asset, so that's $2,000, they equal each other out. So it doesn't have to be one transaction, it's more $2,000, $2,000. That's what you want to equal out. You're going to apply the left side, right side rules for each account affected, making the entry in T account form. And like I said, he did an awesome job all the way through and getting you to realize the key notes in every account. You know, expense, payables, wages, so that you know it clues you in on, okay, what kind of an account this is. So obviously the account balance is the difference between the amounts recorded on the 2 sides of an account. If you had $4,000 service revenue that they paid in cash, and you on September 1st, so you would put $4,000 in your debit. Other transactions throughout the month, maybe you paid rent for $1,000. Well, that would be a credit because you paid that in cash. And I'm just talking the cash account right now on this side. And then you went in and paid wages for $1,000. Well, it's a credit because you paid her in cash unless you have a secretary that will take chocolate. So between those 2, you started out with $4,000. You paid out $2,000. Your account balance is $2,000. If you ever go negative, you have done something wrong. A footing is, and so at the end, you're always going to put a little footing entry, which is a small penciled figure written at the base of an amount column showing the sum of the entries in the column. So you would add up all your debits, you'd add up all your credits and go, wow, I got $2,000. And obviously when you add everything up, it should all equal out. So if the total on the right side is larger than the total on the left, then the balance is recorded on the right side. If the total on the left side is larger, then the balance is recorded on the left side. Make sense? An account shows only one amount. The amount is the balance. So if you got a $400 dividend check, well, you don't pay out dividends, you just get them. So that means that your dividend income account is $400. If an account contains entries on only one side, the total of those entries is the account balance. So the same thing. Sometimes you're going to have an account that it's not going to have a debit and credit. Kind of like I was talking about revenue. Revenue, you should only ever have one side, unless someone came back and went, I don't like your product, take it back. Obviously, Walmart has debits and credits on revenue. Your general small business should not. Okay, I still cannot believe So this is how everything should look. Assets, supplies, liabilities, you got debits, you got credits, then there's a summary, assets equals liabilities. Now here's the thing, there's these little A's, B, D, E, F. Well, if I look at these T accounts, I can see that transaction A, someone gave me $100,000. Well, when I go over and look for another A, oh wow, Caroline decided that she wanted to open up her business and gave $100,000 of her personal. So we note, I said B. Where's A? Oh, they made a mistake. That's A. When they made this, there was an error. And they do that because when it comes to T accounts, you don't want to use the date of the transaction because a normal business is going to have multiple transactions in any given day. So if you use September 1st, you might have 12 transactions for September 1st. You want to be able to show each offsetting and corresponding entry, so you would use, most of the time it's by alphanumeric. So let's do F. So we prepaid rent. So we debited our prepaid rent account because it's a positive balance. Prepaid rent is an asset, but we credited, you go over to F on the cash, we reduced cash by $8,000. So these two transactions go together. Let me see if there's one that has multiples. He didn't do any multiples. B, no, D, E, C, yeah, okay. So you're always going to, that's where you're going to come up with that little alpha, and it just helps because if you just did the first, well, like I said, you're going to have multiple transactions on the first and you can't keep up with that. You want to be able to, again, be able to look and automatically know that this transaction goes with this transaction. I need to note that this needs to be in print screen. Hold on, or else. Okay, so let's go to the next. I wanted to email that needs to be corrected while I'm thinking about it. So in analyzing transactions using T accounts, you're going to set up T accounts for revenue and expenses. You're going to prepare a trial balance for your T accounts, and you're going to prepare an income statement, a statement of owner's equity, and a balance sheet, and develop a chart of accounts. Remember, all of your statements are always done in the same order. Income statement, statement of owner's equity, balance sheet. And when we say develop a chart of accounts, you're going to have multiple accounts. And I'm going to use our school as an example. Tuition revenue. Okay. Well, okay, tuition revenue, but I have multiple programs. I need to be able to know what tuition came from which program. So you might have one tuition account, account code 100, but multiple sub-accounts. So account 101, 102, 103, 104. One's for accounting, one's for business administration, one's for healthcare administration, massage therapy. You want to know where every single tuition aspect is coming, and not, okay, I got $1,000 in tuition. Which program? Which program is getting more tuition right now than less? Which program has more expenses? We don't want to put everything under wages. Our wage account, let's say that's wage account 700, is broke down further. Wages for dental, wages for healthcare, wages for medical assisting, wages for massage therapy. It's the same in any business. Paralegal is going to be the same thing. If you're going to be a paralegal, you're going to have revenue from consulting, revenue from document preparation, revenue from trial assistance. Whatever you do as a paralegal, there's different billing aspects, but you have to show how much money was earned for each category that you do. You know, just like how much money did I earn for haircuts, and how much did I earn for colors, and how much was for perms, and how much was for just blowouts. Where is my money coming from? You know, if you make most of your revenue from perms, then you know where your asset is. If you hardly make any money from perms, then, okay, that means that the last thing you need to do is buy $600 worth of perms. And that's why you're going to have all those different sub-accounts, and that's a chart of accounts. Just like with expenses, you're not just going to put utilities, you're going to put it is broke down. Gas, electric, water. If you have multiple buildings, electric building A, electric building B, electric building C. So we already know the rules of debits and credits. We just got a little bit more. And you heard him say all the way through there, debits to the left, credits to the right, debits to the left. There used to be a little jingle that we had everybody watch, and it's just basically going over that. Okay, and then of course, rules of debits and credits. You're going to see that all the way through. Y'all are going to dream about debits and credits, aren't you? Make sure that in preparing your trial balance that you're using proper heading to include who, what, and when. Who's the company? What type of a ledger is it? They are chasing you, I know. And when is it for? Was it for September 2015? Or are we looking at September 2014? You want to be able to pull out a document and know that you have the right stuff. Okay, so I recommend that you go over your PowerPoints for Chapter 3 and 4. Of course, read your chapters. I know it's a foreign concept, but accounting, as I stated, it makes a difference when you read. Of course, watch your videos that Mr. Cook does, because he does an amazing job, and I've listened to every single one of them. I've read all of your assignments, went over all of your stuff. So everything that you have done, I have done on my side. I haven't cheated and looked at the instructor version. I wanted to make sure that it's something I understood and that you could easily understand as well. Yes, read, read, and read. Remember, I'm available for tutoring. You can call me, you can chat it. It's usually easier for you all to call me because I end up with people in my office and I kind of sometimes, unless I set out on the calendar, sometimes I get sidetracked. So call me on here. So we will see you next Tuesday for the last live lecture. I can't believe it's almost over. This week is probably going to be your heaviest week assignment-wise. There's not that many assignments, but they're more in-depth, and then week 4 really gets a lot easier. It's kind of like, oh, I can breathe. So week 1, week 2, week 3, week 4. I always try to like make it a little heel. So that's all I needed. Yes, thank you. My husband is doing great. He is at home resting, driving me bonkers. So that's a good thing. I'm happy that he's here to drive me crazy. I'm trying to remember that when I want to throw the remote at him because he can't find it because it's 2 inches away from him. So, yeah, I am not a nurse, guys. There's a reason I love numbers. I am not a nurse. God did not make me that. I have a theory, get well or die. Watching those nurses, they're amazing. I don't know how they do what they do. I really don't. So same bat time, same bat channel next Tuesday, and then you're done with me. You don't ever have to see me again unless you have business math with me. So I'll talk to you later. You have a blessed week. Bye.